All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's January 14th, 2022, or 2023. So there's so much that I'm interested in. In this video, I want to cover the supply chain shock, the effects from the supply chain shock from the pandemic. And I want to discuss a little bit about value versus volume when we're considering global trade. Global trade is actually down, I think like 9%, 9.2% since June. Now, this is pretty serious stuff, but this could be the reason we're seeing some of the disinflationary information from the CPI reports. So that's what I want to cover in this video. We did get a comment on one of yesterday's videos. I think it was from Krista. Krista said, "I just can't get down with your name." I suppose she means the new handle, Millennial Trades. I'm a millennial and I trade. So, you know, it's a self-explanatory title or a self-explanatory name. But, you know, thank you for the feedback. Some people seem to like the new name change and other people don't. I suppose if I called myself Vegan Cheetah, that might get some people's attention, right? We are still on this vegan diet, you know, fasting, veganism. It's part of the spiritual development. But, yeah, there's so much I want to talk about, right? The cash that the banks are stacking up on, trying to, you know, increase their liquidity. It reminds me of some of the stuff I'm reading in the book, Too Big to Fail. Then you have the whole currency crisis in Egypt. There's a whole backstory behind that, too. The IMF is, I guess, attempting to put Egypt further and further into debt. So there's a lot of things that I'm interested in, a lot of things that I think, you know, are worthy of discussion on this channel. And that's why we're out here. I mean, it's you guys, the 50 to 100 people that are watching these videos. This is why I'm making these, because if there's even 10 people out there that are interested in the same topics I'm interested in, I'm going to continue to upload these videos and kind of think through some of this stuff with you guys. So that being said, a lot of this information is coming from Eurodollar University, Jeff Snyder. I will link the video that I took notes on in the description down below. But this guy is a macroeconomic wizard, okay? And he's got a lot of good sources from the World Trade Organization, and a lot of really decent statistics. But last month, we had U.S. imports ticking up a bit in December, but they've been falling, you know, for a while now. U.S. export prices are also falling. We're talking about the prices, right? The values. The volumes never really recovered, even going back up to 2008. Volumes have not kept up with valuations, not just for the United States exports and imports, but China. You know, global trade right now is slowing down. The prices are starting to come down. And when you think about the CPI reports that we've been getting, the PCE reports that we've been getting, the PPI reports we've been getting, we seem to be in a disinflationary environment at this point in time. I mean, the CPI that we got out a week ago, the most recent one, that was disinflationary. All right, is the PPI this week going to be disinflationary? You could speculate about that and maybe try to trade off of that. But the truth is we're in a disinflationary environment. Not quite deflation yet, but disinflationary. And a lot of people seem to think that, I mean, even I jump to the conclusion that it's got to be the Fed's restrictive monetary policy that's causing this, right? Or that the Fed alone, by expanding the monetary policy, expanding the monetary supply in the form of stimulus checks and all this kind of thing, that was the cause, that was the sole reason for the inflation and the increase in prices that we've all experienced. And that may not be so. That may actually be, there may be more to the story than that. And then you have to consider the supply chain shocks from COVID-19, the logistics. You know, we had entire fleets of ships just off the coast of California with food rotting for weeks. So a lot of this kind of thing led to the higher prices, the higher valuations in the exports, right, globally that we've saw. So you have both exports and imports in the United States generally down about 9.2% since June. And this is coming, Jeff Snyder gets these statistics from the World TO, the WTO, the World Trade Organization. You have agriculture prices falling as well. Non-agriculture is down 2.7% month over month. So global demand is falling as well. It's not just in the United States. If you look at China's exports and imports, their exports are down, all right, by value, not necessarily by volume, but by value. Exports are down 9.9% year over year. So that means everything that China is exporting to the rest of the world, right, the prices are down 9.9% year over year. That's a pretty big drop. And that could explain, right, when you start thinking about all these different countries that are exporting and the prices going down and, global trade, I don't want to say collapsing, but receding. Obviously, this is recessionary, and obviously this could be partly the reason why we're seeing these CPI reports come in lower and lower. We have to start thinking about global trade along with what the Fed policy is, what the ECB's policy is. We got to think about global trade, and we also have to think about value versus volume, because this is really the key to Jeff Snyder's video, at least for me, right? Understanding the difference between the value of these exports and imports and the volume. The volume never really recovered from even the recession in 2018, 2008. Volumes never really recovered, but values have been increasing dramatically, for global trade, and this is why we've seen the inflated prices. This is partly the reason why we've seen the inflated prices. You could make the argument that the stimulus checks and the Federal Reserve's policy led to it as well. But we can't ignore the global trade aspect of what's happening to our money, what's happening to the prices of things that we buy. And so when you have, like in China, for instance, exports to the U.S. are down 19%. Again, by value. Not necessarily by volume, because the volume's been hasn't really recovered anyways. But by value, down 19%. So what does that indicate? If the exports from China are down 19% year over year, well, it would indicate that demand in the United States has fallen off a cliff. I mean, that's bear market territory. Right, that the exports from China going to the U.S. are in bear market territory at this point. Exports to Europe from China down 17%, almost bear market territory. And then you have imports going into China falling. All right, imports from Europe down 13.5%, but imports from Russia are up 40%. So we can kind of see, we've seen this. We know they're making more agreements to trade oil for yuan, other commodities for yuan. China and Russia and the BRICS nations are trying to figure out an alternative to this dollar system that I'm sure they feel like is a strategic threat to them. A national security issue for China, for Russia, for the BRICS nations. So we can't really blame them for wanting to create alternatives to this dollar system, because the dollar system is being weaponized to basically expand NATO and invade other countries. I mean, there's a lot of horrible things that our banking system is funding, right? We can agree on that, I think. So a serious decline in global trade, all right? Global trade suffering, and we had this huge explosion in prices because of the supply chain shocks and all the logistical issues, right? And so, my opening question was, is it possible that the Fed is not the only reason for the inflation, right? Could it also have something to do with the supply shocks and its result on global trade? But not only that, the second part of the question here is, were the supply shocks a mechanism that was intentionally delivered into the global economy to transfer wealth to an even smaller portion of people? I'll get into that in a little bit. But some broader stats here, right? Again, going back to the concept of volume versus value, which for me is key, one of the key pieces of information from this video from Eurodollar University. So Jeff Snyder breaks down the value versus volume, and from the 2020 lows or let's say 2021 from like 2020, the lows in 2020 to like the third quarter, I think, in 2021, right before the main stock market crash and some of the CPI reports coming in lower, there was a 25% increase in value, right? Just global trade in general, a 25% increase in value. By volume, right, from the lows of 2020, right, after the COVID crash and the supply shocks, to about the third quarter of 2021, by volume, global trade only grew 4.8%. So by volume, the amount of stuff being produced and shipped and traded only increases 4.8%, but the values increased 25%. Obviously, a result of the supply shock, when there's logistical issues and food just rotting off of the coast of California, rotting off of the coast of the East Coast. Obviously this is going to cause inflationary pressure on prices for everyday items, especially food, energy. I mean, that's not hard to understand. So the volume versus value is something very serious to consider, because it doesn't indicate, the fact that the volumes are so low, that doesn't indicate a real economic recovery, because only the prices were increasing. So it was almost fraudulent. Like the rallies in the stock markets, the bubbles in the crypto markets, just the explosion, the velocity of the money. All of this is like fraudulent. It doesn't actually indicate a real recovery from the lows of 2020 or from the recession in 2018 or from the near depression in 2008. Just because the value of global trade increases, that doesn't mean more things are actually being produced or being produced more efficiently. So global trade, coming from the WTO, the World Trade Organization, they talk about this, how the values make it look like the economy is red hot, that every economy in the world is on fire, right? Everything's going up. But the supply shock is what produced the effects on prices and on valuations when we're considering just the macroeconomic global trade landscape. So we have smaller volumes since 2018, a lot of financial issues. Low volume, high value, no recovery. That indicates basically a recessionary environment. It seems to be what the world is going into. Okay, and we've talked about the IMF. The IMF is warning of serious recessions. You also have like shipping companies. This is pretty easy to understand. And I don't really follow shipping too much, but it doesn't matter which shipping company you pick. They're all saying the same thing, that based on global trade, based on the amount of products that are being shipped and the valuations of these products, Europe is already going into recession. China's going into recession. And these are coming from people, from companies in the industries. So there's huge imbalances between supply and demand. It may not necessarily be inflationary pressure because of the monetary supply. The increase in prices that we've all experienced and we're still experiencing, it may be mostly due to the fact that there's these huge global imbalances between supply and demand and trading, exports, imports. Again, from the World Trade Organization, they've cut their trade forecast for next year. Their forecast by volume was supposed to increase 3.4%, but they've recently trimmed that down to 1%. So they've widened the range of what, by volume, right? Not by value this time, but by volume. They've widened the range to sort of, to increase the different possibilities, because they realize their econometric models could be way off, right? That things may not go in the direction that everybody's hoping. So this is why that's a pretty big range for volume, global trade by volume, 3.4%. Some of the estimates were higher than that, and now they're down to 1%. Well, that's just to sort of widen the range in case things don't actually recover. Well, they can say, okay, well, at least we had that in mind. So we've got the shippers. saying that the shipping company is saying global trade indicates major recessions. June was the peak of the supply shock, and that's when we started seeing the weakness in valuations. Things started coming down, and now there's a lot of weakness in global trade. We can see the global trade is starting to recede. I mean, down, what did I say, 9% year over year? 9.9%, I think. I think that's what it was. Just want to make sure I got that fact right on the second. Yeah, down 9.2% since June, right? Global trade. So international price pressures falling, all right? Trimming their forecast, widening their range from the World Trade Organization. Shippers telling us that global trade is receding. Europe's going into recession. The recovery or the bull market was kind of fake. It is basically the argument here, because only the valuations were really showing any strength. And obviously that's not ideal, right? We don't want higher prices for less items. That is not something that we want to strive for. In a healthy economy, you would think that lower prices and products that are being produced more efficiently would be the goal. But that's not what happened. And this is the reason we had the bull market. This is the reason we're still kind of in a bubble, because valuations were so strong, not the volume. When we're thinking about global trade, right? So, as I said, there's two questions here. Number one, is the Fed solely responsible for the price increases that we've seen here? I think if we take in the macroeconomic landscape, we consider the supply and demand on a global level and the supply shock from COVID-19, I think it's safe to say that the Fed is not the only institution to blame when it comes to the high prices in the United States. All right. Secondly, some do speculate, and this is the question, some speculate that the supply shock and the lockdowns, everything that caused the supply chain shock, was a deliberate mechanism that was implemented to transfer wealth from middle class to a handful of individuals. And the reason I bring this up is because you can go to the mainstream media and find out how much Jeff Bezos' net worth increased, how much Bill Gates' net worth increased, how much Elon Musk's net worth increased during this inflationary period, this global inflationary period, due to the supply chain shocks that caused higher valuations, lower volumes. And then you think about things like Event 201 in October of 2019, just 3 months before the real pandemic hit. They basically sat around a table, rolled dice, they played role-playing games, and simulated a global pandemic that happened to be a coronavirus. I think that's very strange that just 3 months later the whole thing comes true. And they're having another event as well. I forgot what country, but Gates and Company, Johns Hopkins University, they're going to run another simulation. It might be in Sweden. No, I think it was Brussels. In Brussels is where they either met or where they are meeting. So some things to think about here, because I think in a lot of my commentary, I've been quick to blame the Fed. Everybody wants to blame the Fed, and we got to blame somebody, right? The Fed was the one that was stimulating the economy. But this whole thing might be much bigger than the Fed, right? Because when you think about the imports and exports falling in China, imports falling in Europe, the Fed couldn't be responsible for all of this, right? It goes back to COVID-19, the supply chain shocks, and the subsequent higher valuations because of the logistical issues. Right? I think I'm articulating this pretty clearly. I'm going to leave the link in the description down below for Eurodollar University's video, because he does explain it much better than I do, but I wanted to summarize it and talk about it and think through some of this stuff myself. I don't think he gets quite as conspiratorial as maybe I'm willing to go, but the two main issues or two main thoughts that come to mind is the Fed solely responsible for the high prices, or does it have something to do with the global trade and the valuations on that? And number two, if it's true that the supply shock is the reason for these higher valuations that we saw, and now the reason for global trade receding or collapsing, and we know that wealth was transferred from the middle class to these very high net worth individuals. Was that something that was done on purpose? Those are my questions. If you have any answers or any thoughts, leave them down below. Subscribe to the channel. I want to thank everybody for being here and everybody who has been subscribing. We're well over 2,000 subscribers at this point on this channel, so it's a big milestone. I appreciate it very much. Give the video a like. If you want to follow me on Instagram, follow some of my trades at Millennial Trades on Instagram. And as always, until next time, I'll see you on the next video.